Welcome aboard, everyone, to another session of charting across the board, where we traders trying to identify potential opportunities in the market. Once again, none of these represent financial advice, but rather an interpretation of the technical information based on technical analysis. I hope each one of you have a rested, long holidays. We're going to be analyzing a chart on the S&P 500 as well as Bitcoin. 2 years ago, today is, or nearly 2 years ago, considering that today is December the 4th of 2024, we have made a projection on the current levels for the S&P 500. Now, we are trading at 6,000, or the S&P 500 is trading at 6,087 on futures, defying and challenging all the pessimism that was previously encountered at the cycle low of 2022. As you guys know, technical analysis begins with theory, okay? Which of course involves an understanding of the principles such as price trends, support, resistance, chart patterns, and indicators. We know that technical analysis is not 100% accurate. However, these concepts are rooted into behavioral finances, how market participants, buyers and sellers, interact among each other. Who's right, who's wrong, okay? That's not how it works. Trading is different. However, recognizing that the market movement can indeed reflect at least this movement or the psychology, they then translate into recurring patterns over and over. Once we move from theory, okay, from the theoretical framework, once at least the theory is established, we then transition into practice. And this is where we transition from theory to practice with the execution. But first, we must have a plan, right, to build, rather than entering. If I make an analogy into going to war, for example, we're not going to enter a war zone without a strategy, right? It doesn't seem logical. However, with a theory, we then execute strategy with a plan. And this is where theory and practice come into place. Starting with a chart on the S&P 500, where are we now? Many of you are recalling and probably are aware that we presented 2 years ago an idea, a technical proposition, a theory back then, understanding this principle of trends. In this case, the primary trend on the weekly and the monthly time frame. Here, revisiting the same technical proposition from 2 years ago. Remember, this time frame or this pattern is based on the macro, the monthly time frame. Therefore, each candle represents 1 month. Therefore, it takes longer to unfold. However, along the wave, we can identify the trend, the primary trend, which back then, of course, was a secondary trend right here, as you guys can observe on the screen right now. We have been within an upward traction from COVID lows to the highs. Where did we find support? At the 50% correction from the A to the B. This level at the 50% correction at 34.93 acted as support. From there on, using or applying the harmonic structure, we do know that this data set, the harmonic ratios, yielding a support at the 50% from the legs A to B, yields then a reciprocal ratio of the 200% for CD, okay? This is where we have been pretty much in a trend since 2022, defying all pessimism, all crash colors over and over and over. And here we are nearing the completion point of this major ABCD reciprocal. That was the first step of our long-term projection on the macro. From there on, okay, because all of this, as I said before, is theory. From theory, we move into practice. And now that we are here, my friends, we are here on the S&P 500. Do not worry, we're going to be also visiting the price action on the on Bitcoin, and we will navigate the idea we presented over and over. As I said before, we move from theory to practice, execution. And this is a psychological factor, okay? I got many members and also friends asking me, when do I take profit? When do I enter? And all of this comes, the execution, or at least the plan, the theory, comes with understanding the strategy you're working on, whether that being Elliott wave theory, harmonic structures, simple patterns such as geometrical figures, wedges, rectangles, and so forth. However, you must have a strategy to understand the levels that you're trading on. Profit-taking levels also comes with the same metrics. The measurement of these, precisely, we can use a metric such as Fibonacci retracement, the common areas of retracement ranging from 0.382, 0.50, and the 0.618. Once we identify support and resistance levels within the harmonic framework, applying Fib retracement once again, we can utilize these ratios for profit-taking or execution, whether on a long position or a short position, okay? From there on, the psychological factor, once you are in profit or also applying the stop loss, you need to know your strategy. How much are you willing to risk? This is a personal decision that each trader may evolve or be encountered with the market itself, right? Whatever I can present to you as my strategy may not work for you. Why? Because each trader develops their own edge. However, what we want to build here is consistency, right? That is what keeps us profitable in the long-term trend. Unless if you want to take this as a career. Once again, none of these represent financial advice, but rather an interpretation of the technical information. Now that we are here, now that we're nearing, okay, the projection then back in 2022, okay, this chart was from December the 5th of 2022, from the lows to the highs, understanding those parameters, harmonic ratios, we then made a projection from the 50% to the 200%. What occurs from here, okay, because you may see that many crash callers are calling the same over and over. They might be right at some point. However, please understand that the entire trend, there was a missing opportunity for the long-term projection. However, in between, applying also time intervals, different time frame, this is also another crucial element to understand when to execute positions. If you are a short-term trader, applying intraday intervals on a daily basis, this may differ on the long-term projection from the macro. However, the same approach applies the same. The only difference between day trading and swing trading comes into the holding position. How long are you holding or staying in a position once you have executed a long or a short? Same projections, okay? So from there, from those levels, now that we are here, okay, we're nearing the 200%, the reciprocal ratio of the 50%. These are not random numbers. We cannot apply ABCD equals or AB equals CD without knowing those ratios. Each harmonic ratios, each data set, in this case, the C point, has a unique proportional ratio. In this case, the 50% yields a 200%. In the event of a 0.618, the key technical level at the 0.618 known as a golden pocket, that would yield a 1.618, the golden ratio, from the golden pocket to the golden ratio. Now, what occurs from these levels, as I said before, we also navigated what may occur, okay, as a theory, speculation only. What may occur from these levels might be key to monitoring the price action. I've seen that many others are calling for a crash. However, there is one person, I believe I asked before, show me if there was one person who made the same projection. Therefore, I did my own research, okay, from the same idea, basically a technical proposition from 2022 to current levels. And I have found in September that Henrik Seberg, I believe he's from Denmark, Copenhagen, he indeed, I respect now his theory and technical analysis based on Elliott wave. However, he's also a macro analyst applying fundamental analysis. As you guys know, we only focus here on technical analysis. However, if both can be combined, that can be indeed and certainly a powerful source or tool to understand the macro as a whole. So therefore, I came across his chart based on Elliott wave theory, and he indeed has a same projection since I believe December of 2022, calling for maybe in 2023, calling for the blow off top. That is what we're seeing all over the place now. Why? Because some individuals in the space do not have their own analysis. Copy is what they are used to. Anyways, I do respect Henry Seberg. Once again, I did send him an email. Hopefully he would accept so we can have him on and discuss technical analysis, applying, once again, Elliott wave theory as well as harmonic patterns, and where can we go from here. I already did my research. Many of you know that I like to be 2 steps ahead of the crowd prior to reaching certain levels. Therefore, let's go. Where can we go from there? Are we going to retrace? Is a crash coming from here now? Please keep in mind that this is a different time. If you were calling for a crash, back in 2022, the market certainly taught you an expensive lesson. Why? Because you were not in the same directional trend. Okay. So you avoided this entire trend calling for a crash. And now here at some point, once again, people may be right. However, this is a flipping a coin without a strategy. Once again, coming into theory to practice. Okay. So from here on, if we reach 61, 62 with an overspill at 63,000 or 6,355 as an overspill of the PRC, the potential reversal zone, I then also did not come with one theory. This one is the only one presented back then. However, we also navigated within the room where the S&P 500 may go if, only if, once again, I hope that is clear, only if we find an extreme resistance here, we then connect once again those harmonic ratios, those data sets applying Fibonacci sequences. So from here on, we have an early structure of what could potentially be from the ABCD to another multi-harmonic structure, potentially for a bullish cipher, right? This pattern has been repeating over and over. We have seen this pattern on Bitcoin prior to the FTX saga. People were calling at the same level, 69,000 to 100,000. And from there on, we collapsed to 15,000. That was certainly the bottom, which, by the way, many were calling also for lower levels. However, 15,000 to 17,000 was the lows on Bitcoin. So therefore, recurring patterns, right? Same framework from behavioral finance. People, or the way people transact, buyers and sellers competing among each other or between each others. So therefore, step 1, okay, ABCD structure. Could we now, after 2 years of, or nearly, it will be, 2 years of this chart, could now be the case for a drawdown on the S&P 500 after a long projection since 2022. Step 1, projected move from where? From the 3,000, 4,000 lows to the highs of 6,162, as well as 6,300, where we are now, or nearly those levels, okay? From there on, the same projection, the same day, okay? December the 5th, also 2022. From those highs, if we encounter resistance, I then have a projection to where? To 2,900, 3,000 basically. I would like to explain that a 50% correction is an average within the S&P 500 or any major US equities. 50% correction is a normal, I wouldn't say normal correction. This will be at that point anything longer than 20% will be a crash. So therefore, a 50% from 6,000 to 3,000 implies 50% correction. To where? To 2,900 or 2,770. That will be a normal move, okay? As we were focusing on the periods of risk from the cyclical rhythm. Because remember, periods of risk was when? 2025 to 2026. We're still ending 2024. However, we're heading into those periods of risk that we were monitoring over and over, analyzing the markets objectively without an unbiased perspective. So that will be a normal correction. However, let's first monitor what the behavior at these levels will be in the market once and if we reach those levels, okay? Only then we will know if the market will indeed correct. As I said before, a 50% correction will take us pretty much to the 3,000 region, 2,900, 2,700 roughly. Okay, the 200% will be again 61, 62 over spiel to 63,000 and change. Okay, what occurs from those levels, we will then know, and we know already that a 50% correction will be completely normal. That will be applying the Fib levels on the free retracement from the lows in this case. In this case, will be pretty much from the C to the D, applying those deepest areas of retracement ranging from the 0.786 and the 0.886. Okay, first we need to see the support levels, 0.382, 0.50, and the 0.618. Something I would like to also monitor and mention here is that we cannot make projection. We can make projection, of course. However, we need to track the minor time frames, such as the 4-hour and the daily, to act accordingly. Okay, because the market will always teach us a lesson, and we are wrong, and we will be wrong at some point. However, this is why we need to remove any preconceived bias. Right, the market tends to, or mother market tends to teach us an expensive lesson all the time. So now, that will be my theory, okay? That has been my theory for over 2 years now. You guys can revisit the previous stream. The same analysis was presented over and over and over. The major ABCD, now all over the place now from others, right? Trying to absorb our proposition as theirs. However, here is where I would like to focus on the monthly time frame, okay? This pattern is based on the monthly ABCD reciprocal. However, moving into the current information based on the daily time frame, there are levels that may come into confluence, okay? And that is pretty clear for those harmonic pattern traders, okay? We then anchor the recent leg of the move on the daily time frame from the highs, the peak, to the valley. And what can we observe here? We then compute those harmonic ratios, okay? Applying the ABCD tool from the great strategy from Scott Carney. It was the only strategy that came or clicked with my reasoning in the market. And therefore, this is what I developed as my own edge, my strategy that has indeed helping me tremendously, I would say. Therefore, we compute those measurements, okay? From the highs to the lows, back to the highs, okay? Discernible high, low, back to the highs, back to the lows. And this B point is extremely crucial as it gives us a clue as to where the prices may go. B points at the 0.886 is often for a deep crab pattern. That would be pretty much at the 1.618, where we are pretty close, nearing those levels at 6,100, okay? However, deep crab patterns also possess a complementary ratio from the 1.618 only if there is no seller stepping at these levels. We then know that prices can always navigate to the 1.90. This is where 61 and 6,300 comes in confluence with our major projection from 2022, the ABCD reciprocal. Therefore, the more variables, the more confluence we have in a chart, especially on the macro, this can act as confluence for a trade opportunity, right? Lower risk and higher reward opportunity. Nothing is certain in this market, in this game, okay? So therefore, we act based on probabilities. all trading is an execution based on probabilities, understanding, and approaching the market with a risk mitigation measure. We're trying to not lose as much, correct? So therefore, you guys know technical analysis is not 100% accurate, but it give us an element of reasoning for risk management. Okay, so what occur at these levels on the S&P will be determined later on. Okay, we are indeed achieving the major projection, which, by the way, Henry Seberg, that had a similar projection, is calling for a major crash worse than 2008. I wouldn't go that deep yet because I never know what's going to happen in the market. I believe nobody really knows. We all present our arguments and then we see if the forecast hits or not, right? In this case, we are indeed achieving. Did I know that we were going to go to those levels? I said before, absolutely not. However, based on the technical proposition, the technical information back then, support levels here, we then speculated in another continuation of the prevailing trend that has been upward from, once again, the reciprocal ratio A to B equals based in time and price, or length, at least based on time, it should be proportional to the same length between the legs C to the D. And this is indeed geometrical patterns, my friends. Anybody else preaching something else different? You guys know they are selling you some rotten cookies. All right, so moving into BTC, where are we now trading on Bitcoin? I believe many of you are expecting and waiting primarily on the price action on Bitcoin. So therefore, let's see what Bitcoin is doing. Last week, in the previous room, in our private room, we executed a short position at 99,300 and 500. That was a short execution that came with a decline of nearly 9%. However, we also executed a short I mentioned before, where the mother market taught me a very expensive lesson, I should say, at the 77,000 region, right? It was 77 to 80,000 was a previous short, okay? However, we have longs in between, 67, 65, another short here. This one was the most recent, the last one prior to this one, okay? So this is what I said, that the market will always teach us a lesson. We're not going to have this 100% accurate. However, this one play out and is booked in the books for the consecutive profit that we have been dragging pretty much for over the years. What I mean, we, is those who are following our work for nearly 10 years, I believe, since 2016 or so, 2016, 2017, for others who are long-term followers. In the previous room, prior to this one, we were also in the previous room up until May. From there on, here we are doing our own analysis, removing any other BSer out there, right? Because we like to approach the market objectively. So we are executing the chart, applying the chart from the legends of the past. We don't have to reinvent the wheel, right? They already left us the research. So all we do is following their research, their work. Understanding, of course, that nothing is 100% certain. So here we apply a short execution. We executed a short on the S&P, 9% decline. From here on, once again, another pattern recognition. There are new levels, right? In this context, we can apply a simple application of the trend line, connecting the major touching points on the upper trend line, in this case, to the lower trend line. We can observe here an ascending broadening formation. Who can tell me what this normally implies, my friend? Or what this type of structure normally implies? This is based on the 4-hour. This normally implies that a trend change may occur. Okay? May occur. Once again, none of this is 100% accurate. However, those of you who can already apply an M and Ws can already perceive what may be developing here. If prices indeed break below, this pattern also presents false breakdowns. Therefore, we have the books from Bukowski, understanding that a 5%, or okay, if a correction occurs that is less than 5%, this can be acting as a false breakdown. However, there is also another pattern. Why the competing forces once again present, leave us their clues. Understanding that technical analysis is only an interpretation of the market forces, buying and selling pressure. Here, connecting points on the upper trend line with a descending pattern, okay, descending price, as well as a lower trend line. Normally, we like to plot at least 3 connecting points, but we can already observe that a formation, another formation besides the ascending running formation, can be also applied here as a symmetrical pattern. For those of you who are unfamiliar what symmetrical patterns imply, these normally imply that the pattern is a neutral pattern, meaning that can break on either direction. If it breaks higher, we have the connecting points to 100,005, okay, 105,000 on the price action for Bitcoin. And if it breaks below, okay, that will be pretty much at 88,000. So either or, right? You can flip a coin and make the argument, will we go higher, will we go lower? What are the strategy that you are applying? For us, we apply harmonic ratios. Depending on the patterns, once they present themselves, once these parameters are established, we execute upon them, okay? I can say the market will do this, will do that, but only when a setup is clear, whether that being an M formation for a bullish Gartley or a W formation for a deep crab pattern, in this case, connecting those data points, only then we can execute upon the information. This will be a deep crab pattern. If it breaks higher, okay, if it breaks below, understanding the patterns also, depending on which one will act first, we then have another pending M formation as well, okay? I can say where I'm leaning more towards. However, the B point will be a pretty indicative sign, whether the B point here for an M formation or the B point here also, okay? As I said before, we can flip a coin and act accordingly. Well, the market will go higher or lower. I'm not trying to teach you, my friends, but there is no secret when it comes to trading. It's all psychological perspective, your approach, your perception of market value. Understanding, once again, lower risk and high reward opportunities. Regardless of your time interval, the hourly, the 15 minutes, the daily, the weekly, and so on. Okay? Everyone, thank you for being here. We will see what the markets will give us for next year. We're looking for March, April for potentially a major cycle on Bitcoin. Once again, March, April of 2025 will be an interesting cycle that we would like to monitor and observe the opportunities that the market may present to us. Everyone, if you have no question in the chart, I see that there is no question. So therefore, thank you for joining me here on this morning on December the 4th. We are experiencing some pretty interesting news across the board. I believe South Korea went into martial law yesterday. Today, I saw the news that the CEO of United Health was shot in New York City prior to their meeting or their annual meeting with investors. Pretty interesting things occurring across the globe, especially in these market conditions. Everyone, thank you for being here. I'll see you guys on the next one. Remember to live a life with an attitude of gratitude. I'll see you guys on the next one. Cheers.